Frederick T. Pye is our speaker today. Fred kickstarted his career as a precious metal and foreign exchange trader at Guardian Trust. In 1986, they were the first to list gold, silver, and platinum certificates on the Montreal Stock Exchange. Fred later joined Fidelity Investments, where he was part of a team that saw its assets rise from 85 million to over 7.5 billion. Through the launch of creative and exotic investment products, Fred started his own firm, which worked diligently with Canadian regulatory bodies to establish the first mutual fund in Canada that was allowed to take short positions. Finally, as founder and CEO of 3IQ, he and his team worked cooperatively with the Ontario Securities Commission for the last 4.5 years to launch the first regulated Bitcoin fund in North America. In a landmark victory, 3IQ was given the green light by the regulator to file a prospectus and apply to list the Bitcoin fund on a Canadian stock exchange. 3IQ is now Canada's largest digital asset investment fund manager with more than 3.5 billion Canadian in assets under management. Mr. Pye obtained a master's in business administration from Concordia University and sits on the board of Canadian Computational Unlimited and Tokens Comp. We are very, very happy to have you here, Fred, and we are looking forward to your presentation. Please go ahead.
Thank you very much, Susan. And again, thank you for a great audience. This is very exciting to have this many people that are interested in learning about Bitcoin. Today, we're going to probably talk about, it's really designed to be just an educational piece. I'm going to sometimes jump off screens and show you some things. And, you know, if it works for you, if somebody really has a burning question, just raise your hand. But if not, we'll leave enough time. But the exact amount of time we have is what, I believe it's 20 minutes?
A little bit more than that. There is a question period afterwards.
Okay, good. So we'll just try and turn off all my phones. Yeah, so to get started, Bitcoin is really, really, really exciting, and it's in its 12 years since its inception. It is the most prolific investment ever in the history of time, meaning it's gone from, you know, pennies a share or pennies a unit to over 40,000, 50,000 Canadian in a period of 12 years. And the early investors were people that understood the technology. But now what we're seeing is people are investing in Bitcoin as a store of wealth. It's a digital store of wealth like gold, or they're doing it for diversification purposes. Bitcoin is pretty much contrary to anything else that you already own. So in diversification, it doesn't behave like anything else in your investment portfolios. So we have the biggest family offices, the biggest institutions, and all the wealthiest people are now putting money into Bitcoin just as a diversifier. But to start off, I'm gonna explain that Bitcoin is two things, and I think not many people understand this. Bitcoin, number one, is the most powerful, secure computer network in the world. Okay, and what that means, it's like the internet on steroids because it is the most secure computer network in the world. But the way to get access to that powerful, secure computer network, okay, you must use the token that's called Bitcoin. So when we talk about the Bitcoin blockchain, we're talking about capital B. When we're talking about Bitcoin, the token that you have to own to put a transaction on this internet, we use Bitcoin with a little b. So to start off, I'm actually going to show you exactly what Bitcoin looks like when we look at the entire network. So what you're looking at here is you see the globe, and I hope it's clear enough on everybody's screens, but there's little blue dots that are flashing all over the world, absolutely everywhere in the world. If you looked at this 40 years ago, you were looking at what was called the beginning of the World Wide Web, the information superhighway, or the internet. That is what you were looking at, which is computers talking to each other all the way around the world. And that's how information travels around the world. Okay, now, Bitcoin as a use of cash, if I were to give Lynn 1 Bitcoin, that Bitcoin transaction would be recorded on every single one of these computers in the world, of which there are over 40 million computers powering this network. Okay, now, of course, it doesn't do every single transaction. It accumulates bunches of transactions every 10 minutes. We'll say they're in a basket, but let's call it a block for the sake of it. And that block goes around the world. So bottom left-hand corner, you see block number 700,675 is going around the world right now. And out of the 10,000 that, or 8,000 that this computer is showing right now, it's almost about 96% complete of going around the world. So what it is that every transaction on Bitcoin gets recorded on millions of computers at the same time. Okay. The next slide, if you can see, are the actual transactions being built. So down here on the right-hand side, you see a $329,000 transaction beside a $20 transaction beside a $111,000. These are the transactions that are happening right now as we speak. There's a 19 million transaction. So you can put a $19 million transaction beside a $26 transaction. And those transactions go and sit upstairs in what's called a memory pool, okay? Because the memory pool is waiting for block 700,675 to finish coming around the world, okay, and coming back, and that block gets chained to the block in front of it, which means it is now immutable. You can never change that transaction. It is cemented in history forever. You cannot change that transaction. So the new block that'll be created will get created, and then a whole bunch of these transactions will jump into the next block, and it will go around the world. Okay, and it takes about 10 minutes for each block to go around the world and cement those transactions into history. Okay. So what we were showing you was the blockchain, which, as I mentioned, was the internet. So if you're going to allow me, I'm going to give you a 3-minute or a 5-minute history of the internet, and you can understand how powerful it is. So the internet was created in 1971 by something called a TCP/IP, a transmission protocol, the internet protocol, that was created by the US Defense Department so they could have two computers talk to each other at the same time on either sides of the world. And it wasn't until 1982 that the Simple Mail Transfer Protocol, SMTP, better known as email, was created. So email was created 11 years after the internet was created. The big one was HTTP, the Hypertext Transfer Protocol, that allowed you to jump from one internet site to another internet site. And that was what we call the birth of the World Wide Web. Okay, that really started to change everything. And again, understanding that all of these protocols are displacing old traditional technologies. Okay, we then had HTTPS, which is a secure socket protocol. We had voice over internet protocol that wiped out long distance phone calling. It's amazing that Bell Canada got away with charging for long distance phone call for the next 25 years, even after it was created. Then you have XMPP that was created, which is the text messaging protocol. And then you have the big granddaddy that's been displacing is the BitTorrent protocol, which is also known as live streaming. Live streaming completely disrupts the way everybody consumes entertainment or media or anything else. So if you notice, all of these protocols, okay, if you understand this, all of these protocols displace, okay, a traditional technology, okay? But all of those were free. And it wasn't till 2008 and the Secure Value Transfer Protocol was created, meaning a protocol that allowed you to transfer money, ownership, title, and value anywhere around the world instantaneously and virtually for free. The Secure Value Transfer Protocol will displace everything, also known as DeFi FinTech. It will displace banking. It will displace real estate. It will displace the way your medical records are viewed. It will displace everything in the world. So when you think about how big is this technology, it's going to take 25, 50 years, but it's just getting started. I'm going to share my screen again. And now when everybody says, okay, what's the difference between the internet and the blockchain? We mentioned before, the internet facilitates the unsecured free movement of information. So it is a very thin protocol layer. So these protocols got created, but who made all the money? The value was captured by Netflix, Uber, Google, Amazon, Facebook, all the big technology companies, and in fact, every business that uses a free protocol. The next is what we call the fat protocol layer. To create an application that sits on a blockchain, okay, whether it's an insurance application, we call them a smart contract. You can program in a smart contract, for example, your airplane takes off, you've got insurance. If your airplane lands, the insurance is gone. If the airplane crashes, you automatically get the insurance. So, but these protocol layers, Bitcoin, Ethereum, Tesla, Litecoin, Algorand, you get to own the protocol layer. So the value is captured by owning the protocols that are protecting this network. So all of a sudden, the internet's not free anymore. You actually have to pay to put it on the internet, okay? So that's really one of the most important parts, you know, about what we're talking about. The beauty about Bitcoin, and they will be bigger and faster and better blockchains, but the beauty about Bitcoin is once it was programmed, you can never change that program. And that program built into it a fixed number of Bitcoin. There will only ever be 21 million Bitcoin in the world, which means everyone at some point in chasing, and at some point in time, everyone will be chasing those 21 million Bitcoins. Okay? Bitcoin is a store of wealth. Gold grows at a 4% rate per year. And everybody understands gold. So they believe gold is a store of wealth because of its scarcity. So Bitcoin today grows at 4% per year. The difference being is Bitcoin's is going to be reducing its growth rate to 2% per year in 2 years. And 4 years after that, it's going to be reduced to 1%. So that's why gold has gone from 1,000 to 1,500 and Bitcoin's gone from 100 to 50,000 because its overall supply curve, okay, is fixed. When you have skyrocketing demand and fixed supply, the only outlet is price. So as long as the demand for Bitcoin, the demand for the internet or the secure internet continues to rise, the price will continue to rise. Okay. Now, the thing that is most important, and I always ask this question, I usually ask it early on. The question is money going digital? Yes or no? And the answer is yes, of course it's going digital. But it's not going digital just Bitcoin or any of these other tokens. It's going digital US dollars, digital Canadian dollars, digital euros, because people will still want to use the currency that they have. But now you'll be able to move that digital Canadian dollar around the world instantaneously and virtually for free. Now those digital currencies have to get created and sit on the blockchain. And a friend of mine, David Taylor, owns a company called VersaBank here in Canada. He's our business partner now as a Schedule A bank in our stablecoin, our digital Canadian dollar, called now called VCAD. It was QCAD. It's now renamed as VCAD. So David said he set up the bank accounts, he did all of this, and all of a sudden he gets the phone calls from Ottawa, Central Bank of Canada, the governor, the FINRA, FINTRAC, all the money laundering people, they're all calling up and they're going, you know, David, what's going on? He says, well, come to Ottawa and I'll explain it to you. So I got them all in the same room. And they're all in that room. And he says, remember when we were hippies backpacking around Europe in the 70s? And they said, yes, of course. He says, well, what did we use as money back then? We didn't have credit cards. We didn't use cash. We used American Express traveler's checks. And what was an American Express traveler's check? It was a paper representation of a deposit at a Canadian bank, and you knew you could always get that money back. Well, all David has done is create a digital representation of a deposit at a Canadian bank, which means now your American Express traveler's check now sits inside your phone, and you can use that anywhere in the world that you go. This, I can't even try to explain to you the disruption that this is going to cause. There's a reason why Visa, MasterCard, all the biggest companies in the world are trying to understand this. Yet right now, the major Canadian banks ban their clients from owning a Bitcoin fund because they've never had the presentation that explains it, that it's not complicated, it's just very simple. So on that note, which is my 20 minutes, do you have any questions? Do you want to take a peek at a couple more slides while you think of your questions?
By all means, yes, please.
Okay, I'll share a couple more slides. So, oops, am I sharing the right screen? Do you see daily Bitcoin transactions?
Yes.
Okay. So on these daily Bitcoin transactions, as you can see, since 2012, the Bitcoin transactions grow at an exponential rate. The value of Bitcoin is the same exponential curve as the usage. So it's not speculative, it's not in a bubble, it's nothing. It's tracking its demand price. And the Bitcoin price is exactly following its transactional value. But when you take a look at it, that Bitcoin outperforms again, you're going to ask your investment advisor, how come Bitcoin was the best performing in 2010, 11, 12, 13, 15, 16, 17, 19, and 2020? And said, how come I don't own one of the best performing assets out of all the asset classes? And that's how I got started in this. I was running a multi-asset momentum portfolio for Horizon's ETFs. And I saw this by 2012. I said, I want to get into this. You know, I want to be part of this Bitcoin. I learned about it and I understood it quite simply, which is why I try to explain it to everybody. But if you had added a small percentage, so this is a traditional 60-40 portfolio. your average annual return would have been 17%. 1% Bitcoin took it to 20, 2% to 23, and 3% increased your total return to 25% per year, okay, over that 3-year period. But the most important part is Bitcoin's not correlated to anything. If all of a sudden stocks and bonds and the printing presses stop at the governments and you're concerned about the massive printing of money, Bitcoin and Ethereum are very similar to gold, meaning they're not related to anything else. Here's the relationship between Bitcoin and the S&P 500. There is no correlation there whatsoever. What we can tell you is the inverse relationship. The purchasing power of the United States dollar is down 99% in the last 100 years. Okay, and that's what we're looking for. This is where our digital scarcity comes in. At the next halving, Bitcoin will be probably somewhere around 100,000 per Bitcoin. And 4 years from now, the Bitcoin will probably potentially be based on the stock to flow model, somewhere around $1 million per Bitcoin, which still makes it, a fraction of the price of what gold would be. So we think we've got something that's very exciting. As I said, you can buy our funds on the Toronto Stock Exchange. But it's, our goal is to get financial advisors to take a very seriously look at this. And as we bring our funds around the world, we'll be opening up many, many more fun, exciting things. And 3iQ, which peaked at 4 billion a few months ago, was the fastest growing investment firm ever in the history of Canada from scratch. So it's starting to work for us, and I'm glad you took the time to listen.
Thank you. Thank you so much, Fred. We do have questions. I'll start with one that I have in the chat. What do you think about QuadrigaCX and the scandal that came with it?
That was almost a godsend for me, because here I was trying to run a regulated fund, and you have a bunch of criminals running an exchange, and we're saying that was in our court case. So what we did is we took the Ontario Securities Commission to court in front of in front of one of the commissioners in a public hearing. It lasted 3 days and millions of dollars. And in the end, the judge chastised the Ontario Securities Commission for regulatory overreach. And they said it's time for the regulators to get up and do their job, which is to regulate. Because 5% of Canadians had money in non-regulated platforms, including QuadrigaCX. 110,000 Canadians lost $250 million. We said, how can that be irrelevant? Like, your job is to stand up and protect people from that. So that's one of the reasons why we got accepted and regulated. So we had to prove that we're audited, that our custody is secure, stable, and safe. We had to prove that, we had to prove our experience, our knowledge, and we had to challenge, they were talking about volatility. Well, volatility is neither here nor there. Non-correlated volatility is very, very good for most portfolios. So we had to prove, on every aspect, and we won on every aspect.
Thank you. Does anyone have any questions that they would like to speak to Fred? There we go. Jim, go ahead, please.
Fred, first I want to speak to the group that are here. I want them to acknowledge the fact that since I am the bulletin editor today, I probably have the toughest job that a bulletin editor has had since this club started. And you're all going to pay for it. Okay.
Well, actually, we could ask Fred if he has a cheat sheet.
Yeah, really. Well, I think I've gotten most of it, but we'll see what happens when it comes out.
Okay.
We do have a retail approved presentation that I'll send to Tony Layton, and he'd be free to circulate that. It'd be my pleasure. We obviously do have a website, but a lot of this is more just, you have to show the simplicity and the passion behind what it really is. It's again, we're all looking at how much time do we have to see how big
That's
it goes. But I'm glad I started. So.
Oh, absolutely. And one of the points that I've taken here, so you said that the financial advisors need to be educated.
And that is
Do they need to be
completely true.
educated, or what's their problem right now? I would suggest that there's fear. They're afraid of this technology or this. Would that be fair?
Well, the independent advisors are all over it, and the Canadian banks will tell you that all the banks stick together in the proper collusion as they do. But if you're one of the biggest advisors at the biggest banks, you can always, of course, buy my funds, because they're not going to tell their biggest and best advisors that they can't own it. Now, having said that, it's the compliance departments within these banks that don't get paid to say yes, right? They get paid to say no, and they just don't understand it, and it's unfortunate, because it's, as I said, once you realize all you're doing is buying a technology, and again, you can buy Bitcoin by buying a technology stock on the New York Stock Exchange. There's one guy that gave up on his technology and just started buying Bitcoin. So it's a MicroStrategy is a replication of a Bitcoin fund. So how they get away with that and we don't, or you can buy Bitcoin miners on the Toronto Stock Exchange. But really, it's you just start by saying, what, it's my little bit of gold. I do own gold. I'm not, as you know, that I've been a gold bug with Howard Kelly from Guardian Trust in 1983. I've been a gold bug for a long time, but I'd say if you own gold, you should own Bitcoin. And conversely, if you own Bitcoin, you should own gold. It's everything else you have to be careful of. The printing of money, none of us have seen in our lifetime that we're facing right now. And yes, it'll never come to an end, but I'm pretty sure it will. So you want to make sure you have other things.
Okay, thank you.
Thank you.
The Versa Bank is unknown to me. This is from one of our members. Are they a CIDC bank? What is their main business?
Yeah, no, they're a Canadian chartered bank. They'd be the 7th largest bank in Canada. So you've got the big 5 plus National Bank. You've got Laurentian Bank, and then probably Versa Bank. They're based in London, Ontario. Mostly do private banking in the region in London, Ontario, but also they do mortgages. So you'll have Versa Bank mortgages and different things. But David created the Versa. Well, David, again, like me, I mean, we're well into our 60s, and he recognized this early on, and like we're easily the 2 oldest guys in crypto in Canada. The average age of our employees, I think, is probably 28 to 32. We're really trying to wave the flag and get more people involved. But our partners are real. I don't know if you've ever heard of Kathy Wood at ARK Invest. Kathy Wood, when ARK was $60 million, now they're $60 billion. Kathy would come with me to the Ontario Securities Commission to argue our pieces all the time. They're shareholders in our company. So we also have Gemini, Van Eck and Associates, a $50 billion US asset management firm. We're discussing, joint ventures with some of the biggest firms in the world. And we're audited by Grant Thornton, RCGT here in Montreal. The 2nd largest digital asset manager in the world is a company called CoinShares. They took a 10% position in our company. So we're the 3rd largest. So it's the classic 2nd and 3rd largest getting together to see if we can take on number 1.
Okay, thank you. So just to confirm, the Versa Bank has CIDC protection, right?
Yes.
Okay, all right. So does anyone have a question? Here we go. Tom Burpee, go ahead, please.
Yeah, Fred, you're talking about everyone as though they're a winner. Are there any losers?
Yeah, I wouldn't be buying any coins named after a dog, as in Dogecoin, right now. We think, we do have a global crypto asset fund. Tom, I think there's about 5 blockchains that I like. There are a lot of fake ones that are out there. We call them, well, it's not appropriate, but there's an awful lot of dead soldiers in the field, very similar to the internet bubble of the late 90s, and early 2000s. So there are a lot of skeletons in the closet. So right now there's some 11,000 different tokens or supposed blockchains.
Thank you.
Good, Tom. Yeah. Anyone else with a question for Fred? I'm not seeing any hands up. No more questions? Okay. All right. Well, Fred, this has been fascinating. Thank you so much for joining us. That presentation was illuminating. And please do send that packet to Tony and we'll distribute it to everyone and it'll be nice bedtime reading.
There's just lots of colored pictures and everything. It's again, we try to boil it down to something really simple. I've listened to some other people's explanation and I don't understand it. So I had to figure out my own way to explain it properly. So anyways, I want to thank you very much all for having me and good luck with your seminar series. And when I'm back in Montreal, I'm sure I'll bump into some of you at some point in time. So
thank you so much.
Thank you very much.
Thank you. Thank you so
Bye-bye.
much, Fred. Bye-bye.